December, as you know, has been one of the most volatile series of 2014, with the Nifty oscillating 1,000 points from the top to the bottom and then a sharp recovery. It has currently lost 3% this series, but the Bank Nifty has been resilient. How will expiry pan out in these crucial minutes, and what does it tell us about the January series? To answer all of these questions, we're now joined by Siddarth Bhamre of Angel Broking. Good afternoon, Siddarth. What do you make of how we're ending the December series? And let me ask you the question we put in the introduction. What does this tell you about the January series?
Good afternoon, Menka. We were of the opinion sometime back that 8180, 8200 is what we are expecting. But we had changed in the sense we had given up on the view few days back when market was trying to move above 8350 odd levels, and now what we are seeing is 8,200 is quite likely for today's session. There are a lot of activities which have happened in 8,300 call, 8250 put, which Anuj was mentioning some time back, but not many people have given much attention towards 8,200 put, and it is not just important to see what happens on last day, but overall in this series what was happening in strike prices throughout the month. And we have observed that there was good amount of buying which was done by FIIs in 8,300 put option, and that time the premium prevailing was around 40-50 odd rupees. So for them to make money, and they're still holding those positions, we have not seen any unwinding in those put options. So for them to make money in those put options, market should close below 8250 odd levels, at least break even point, and they'll make some money out of it. So I think we will in the fag end move towards 8,200. That's what we are assuming, though we are not very confident about it, what we were like last time. But if I look at the Jan series, we are not very optimistic. We are not seeing this market immediately in first half of Jan series going above 8450 odd levels. In put options, we are seeing built up happening in deep out of money strike prices, and again stronger hands are active over there. IVs of calls are higher than IVs of puts, which clearly suggests the sentiments that people are still willing to buy this market on dips rather than think of shorting this market. In this entire fall, shorting has not taken place. People have just squared off their longs and they are buying again. So there is a complacency in market that this market is not going to correct beyond say 5-6%. Liquidity indicators, there is whatsoever no bounce back which is seen in crude oil, and which has been the main reason why globally we have seen so much of uncertainty. So as long as Brent crude doesn't move above 62 odd levels, we are not thinking of buying this market. Though in yesterday's trading session, FIs have bought 1,400 crores of index futures. Now this can be a confusion, because last time, if you remember, beginning of December series, also 2 days FIs were net buyers in big way in index futures, but we all know how December series panned out. So we are not optimistic, at least in first half of Jan series.
Siddarth, hi, good afternoon. What about the Bank Nifty, which has been clearly the more resilient one, and in fact just 2 days back was nearly at all-time high?
Yeah, Anuj, I acknowledge the fact that it's near its all-time high, but then that momentum is not there even in Nifty. In fact, just Nifty 10 days before was at all-time high, but we saw the correction. So I won't give too much of weightage that it is at all-time high, so it may not correct. But what we are doing is, instead of suggesting shorting in Bank Nifty, we are suggesting at higher levels shorting Nifty or buying put options of Nifty, because put IVs are lesser than call IVs. But in Bank Nifty, what we are seeing is the components of Bank Nifty are showing varying trend. HDFC and HDFC Bank, HDFC is not part of Bank Nifty, but these two stocks are showing strength, whereas we are seeing that ICICI Bank, Axis Bank are exhausting at higher levels. So shorting ICICI Bank, Axis Bank is advisable. HDFC Bank has a good weightage in Bank Nifty. So either you form a pair where you go long in HDFC Bank and short ICICI Axis, or you go short in ICICI Axis and long Bank Nifty. But a clear trade in Bank Nifty is not emerging for us. So our biasness remains negative, and that's the reason we won't go long in Bank Nifty as well.
Okay, what about high beta names and today's trading action? Would you read too much into this? Unitech, JP Associates, Ashok Leyland, all these high beta names surging 5 to 6% in trade?
No, I won't read too much into it. It is quite possible that, a day after expiry also such stocks give you momentum. But then these are not stocks where, you can make any positional gains if you trade, even with stop losses in place. So I will not get into mid caps, especially, these tainted names at this point of time, and stick to large caps. Shorting also, we are very particular that we will suggest shorting in Nifty and in large cap stocks. Mid caps, even if there are a lot of mid cap stocks where we have an opinion that they might correct significantly, but we won't initiate shorts there.
Okay, so what stocks are looking good to you, Siddarth, in terms of rollovers? There's Tata Motors DVR with 81%. There's HDIL, which has seen high rollover. But anything that stands out for you in terms of high rollover?
Anuj, only seeing rollover figure might be, not a right way of seeing it, because sometimes high rollovers.
Okay, even if you compare it to the roll cost, if you could tell some of the stocks that look interesting to you.
There are a lot of parameters which one has to see that, if roll cost is high and, there are a lot of rollovers are happening. So people assume that this is long rollover which is happening, correct? Now, only because people are rolling long position, that doesn't mean even I have to, go long in that stock. So if I, put our parameters into place, we see that rollovers this time in terms of absolute open interest, mind you, beginning of December series, we were mentioning that rollovers are quite high on the higher side, 13 months high, and that's the reason long unwinding would set. To our surprise, despite market correcting, Nifty rollover, Nifty open interest is higher than what December series began with. November series end with. So this suggests that still there are too many long positions. People have still not given their long positions, and they are anticipating market to bounce back. Same thing we are seeing in stocks also. Stocks corrected mainly because of long unwinding, and now again we are seeing formation of long positions. So I would suggest not to get too carried away by high rollover figures in some of the stocks. And get carried away by that and form long positions. It can be a no trade zone for us where we are not confident whether this market would immediately correct or not, but certainly we are not suggesting to go long in this market.
What about pharma names? We've seen quite a bit of buying in mid cap pharma.
No, Anuj. Again, this is the market where if correction continues, and again, we have a lot of indicators. We might change our view if crude oil changes. If I continue to buy an index future, so but till that time, till that is not happening, even safety nets like pharma may not see positive return. We were seeing, when this correction started, IT stocks started giving you good returns. There was a huge run up in TCS, Wipro, SCL Tech, and now again we are seeing these stocks are giving, their gains. But at the same time, Nifty is not giving you that significant upside move. So we are not bullish on any of the defensive sector also if market corrects further. Again, when we say correction, we are not talking about change in structural bull market, or we are not saying okay, the bull market is over, but whatever concerns we had pertaining to this global liquidity or global oil scare, I think that is not behind us as of now, and we are taking this pullback in market quite for granted that okay, the fall is over and we are again heading to all-time high, and probably with the momentum would continue. So I think it's too early to take that call and start forming long positions in market again.
Right, Siddarth, can we talk about some stocks that have done either very well or very poorly through the course of this last series of the year, and therefore whether they stand out for you, in the January series? For instance, on the losing side, stocks like Jindal Steel and Power, Kane India, down 20 to 40%. They've been, they've had a rough 2014. Does 2015 look any more promising for them?
I won't be, in position to comment about the stock for entire year, Menka. But what I can say is...
I like the troubled voice with which you said that. Yeah, well, maybe we can limit our horizon to the January series, maybe.
Yeah, that sounds like me, So I feel that these stocks are still not out of weather. And Kane India, again, if markets are bouncing, if crude is stabilizing, I don't see any reason why Kane India should have corrected again. So these stocks are again some sort of lead indicators that where market would be heading, or where the underlying, the basic underlying would be heading. So I don't think so market is expecting any kind of support crude would take, and Kane might continue to drift down further. In between, out of technical optimism, we initiated long call in between around 250 260, but we moved out very immediately. That small bounce back came, but is that confidence of again to play for a bounce back in Kane is there? Answer to that is no from us. Jindal Steel, we don't trade significantly, but in similar space, I think Tata Steel has seen good amount of shorting which is happening. There was small bounce back in between as market jumped from lower levels from sub 8,000 to 8,300. Even Tata Steel came up, but we didn't see any short covering. We saw positions getting built up. Today also stock has gone up because of some reason. But still we are seeing shorting happening over there, and rollovers are also quite good. So that is one stock where we would short. Hindalco is one stock where if I want to initiate buy in metal space, then Hindalco I'll wait around 140, 145 zone. It's an accumulation zone for us, Hindalco. So these are two trades in metal space. Jindal Steel, I won't be very optimistic or pessimistic.
Amongst the other losers, and there are I think only 7 losers for the year at this point in time. There's Wipro and Reliance on that list. Are these stocks that you think the weakness will continue into January?
I think Reliance weakness would continue, though in-house call is that we are bullish on the stock from long-term perspective, which I am also bullish on. But from shorter-term perspective, I think there is going to be disappointing quarterly numbers which are waiting for us. Inventory losses, crude going down, GRMs would be weak. We are seeing shorting happening in Reliance. 880 is good support at this point of time. Probably stock would hold on for this series, but beginning of next series, I think that support might go 840, 820 is visible, and probably that is those levels. One can do aggressive accumulation in Reliance. Caveat: if crude continues to fall, if crude bounce back, then probably scenario would change.
Yesterday we had the Saudi oil minister say, who cares even if crude goes all the way to $20 a barrel. Yeah, I know. Yeah. So that was some saber rattling going on there. Stocks that have done very well this year: Maruti Suzuki, top of the heap, almost 100% increase for the year. Axis Bank, IndusInd Bank just behind that, and then BPCL, PNB, SBI, mostly dominated by financials, but Maruti and BPCL have also joined that big list of gainers.
Maruti, my strike rate is not good, and I've generally gone wrong over there, so I won't again try to increase my strike rate over there. And other stocks which you mentioned from banking space or BPCL, again, because crude is falling and it's a both upstream downstream company, so that optimism is over. In fact, forget about BPCL. Even on charts and data wise, now IOC and Hindustan Petroleum are also looking weak, so we are not optimistic over there. Banking space, too many long standing, and I mentioned that some of these stocks are looking good and some not so bad. So there we are having a bit of confusion, but certainly not going aggressive long.
Okay, looks like Siddarth, your Nifty's strike rate is perfect right now, because as the 3 p.m. clock, as the clock ticks to 3 p.m., there's a sudden fall in the Nifty. In fact, from 82.50, the Nifty is now down to 82.17, 82.16. Intraday chart, tick by tick chart should come up for Nifty. This is the expiry factor that we were talking about, until 3 p.m.
8,200.
Yeah, so 8,200. It'll be interesting.
It's making a dash for that.
It's making a dash for 8,200 put, and as Siddarth pointed out, 8,200 put. No one was talking about that. That premium almost collapsed to half a rupee or so. The low was 40 paise, and it's gone up to 4 rupees. So if at that time you would have bought say 8,200 put, you would have got 9 times or 10 times of your money in the point in which the Nifty has only moved 30 or 40 points. That's actually the magic of the expiry day trading and the last 30 minutes of trading. 82.08, 82.04 as we speak now. So let's actually pull out the stocks that are leading the market down.
BHEL tops that list, but in weightage it would be ICICI Bank. So if you pull up the intraday list of stocks, the intraday charts of some of those stocks, you'll see it's BHEL, but ICICI Bank tanked, and that's sort of a big weight on the index. PNB, DLF, SESA, Tata Steel, Bajaj Auto. These are all stocks that have tanked in the last 15-20 minutes or so, and are pulling the Nifty down with it. SBI in terms of weightage, there you've got it. Ambuja Cements giving up gains, Grasim giving up gains, HCL Tech giving up gains. A bunch of stocks that have fallen off the cliff in the last 15
Infosys
minutes.
is down, Tech Mahindra is down. You're getting a whole host of shares, just heavyweights dropping off in the last, even in the last 2 or 3 minutes.
I think HDFC, in any case, that was weak, but that's one stock which traders target whenever the market moves on expiry day, and actually the biggest drag on the Nifty now, 11 points. And if you see the intraday chart of HDFC, the incremental weakness has come on that. 81.95 now actually on the Nifty, and the 8200 put now trading at 6 rupees. Siddharth, I'm sure you would have had positions if the market was, if someone would have listened to you, he would be, like sitting on triple the money right now. But what's the call now for those trading the current series? Take profits at 8200 put, or stay with it for next 10 to 15 minutes?
When trade goes profitable, in hindsight it looks that people must have listened to you, but generally people don't listen. And
Siddharth, you sound a bit like Santa Claus today, Siddharth. A very spiritual, introspective Santa Claus.
Okay, coming back to the markets, I feel it might drift towards 8180, which is support, 8180, 8200. So whatever you had to make, you made already, Anuj. Maybe 10-15 points more from here. Beyond that looks unlikely, because then again post-closing averaging come into play. So beyond 15-20 points, I'm not seeing very significant downside from current levels. But that is for today. Structure, positional perspective, I think this is sell on rise market.
Okay, Siddharth, thank you so much.
One last question. So that most of the stocks that we put to you were stocks that we put to you. Is there anything that you want to point out as a stock that looks very promising for January that we may have missed?
Promising for the short trade, ICICI Bank, Tata Steel, Reliance, these are large cap. And why we are giving large cap? There will be a lot of mid caps which would correct, but we won't give the trade because we don't want to trade short in mid caps. Short Nifty, short some of the large cap names. Don't get carried away that Bank Nifty is at all time high, so it won't correct. A stock which is at all time high has more potential to correct because unwinding may happen. So these are few trades. Generally 80-90% of volumes are Nifty trade. So even if you are looking for the shorting side, buy some put options or short Nifty at high levels.
Thanks for that, and thanks for that excellent call.
Yes,
Merry Christmas. If people had listened to you, it would have been a really Merry Christmas for them.
Thank you so much.
Thank you. Merry Christmas to you and everybody at Angel.